look, welcome to Terry's Tips. Guys, I am excited about today's video because literally one of you is going to watch this video and the information is going to change your life. Get a notebook, get a pen, because today we're talking about renovation loans, specifically the rehab loan called a 203K FHA loan. Okay, guys, write that down. And specifically, I'm going to break down what is an FHA 203K loan. I'm going to give you guys some do's and some don'ts. And the reason why I'm breaking it up like that is to simplify this process for you. And I'm actually going to give you some real estate strategy around forced appreciation. You hear my quotation marks, right? Because I'm going to define all these terms for you. And then I'll do my nugget at the end, which is going to be an action item for you guys to take advantage of to actually qualify for this financing in the next 30 to 90 days. Come on, somebody. Okay, so what is an FHA 203K loan? Guys, an FHA loan, right, it just means that it is government backed. It's traditionally for first-time home buyers, and it always has a lower credit score requirement and a lower down payment. Now, pause. The reason why that is significant, guys, is because many people want to invest in real estate, and I am here to help you for all of it. However, when you are a real estate investor, just by definition, that means that you have money to invest. So hard money loans and commercial loans and other loans that are for specifically investment properties are usually 10%, 15%, 25% down, which is a lot of money. However, an FHA 203K loan, you can actually get a property that needs some works and needs some renovations and only put down 3.5%. Come on, somebody, right? And so a 203K loan just means that the bank, right, the lender is going to give you the money to buy the property and to renovate it. Write that down. The bank, a traditional bank, is going to give you the money to buy the property and to renovate it. When it is an FHA loan, you still have that 12-month requirement, kind of owner occupancy, because it's an FHA loan, okay? Now, this is where, guys, there's two types of 203K loans, right? A limited and a standard. The limited is what I used to actually call a streamline. And back in the day, because I've done this kind of loan before, I actually love this kind of loan. It was $50,000 under. Based on the lenders that I talk to and just what's out there now in today's market, a limited is going to be where the renovations are $35,000 and under. $35,000 and under, okay? So to simplify, a 203K FHA loan means that you are a first-time home buyer. Guys, do not get hung up on that word, okay? Because I have had multiple FHA loans. Let me give you a real quick example. I bought my very first house at the age of 21 while only making $14 an hour. I later sold that house. So now that mortgage was a zero balance on my credit report. And then I bought another house with the same FHA type of loan with, again, 3.5% down. So there are circumstances. The nugget right here is there are circumstances, a ton of circumstances where you can qualify as a first-time home buyer based on your situation, based on your state requirements for what a first-time home buyer is. So don't get hung up right there. Maybe if you had a house and then you sold it in a divorce, or there was a death, or you refinanced it and paid it off, or whatever it is, a lot of times many of you qualify for an FHA 203K loan. And this is where, like I said, the bank is going to give you the money to buy the property and to renovate it, okay? Now, some do's, okay? Write this down. You definitely want to have a credit score of at least a 620 to 640. Obviously, guys, the higher the credit score, the better. I'm not even going to lie to you, right? It'll be an easier process for you. A lot of times your interest rate will vary based on it. And mind you, nugget right here, not all lenders do 203K loans, which is why you need to stay all the way to the end so I can kind of direct you in this area, okay? So many lenders do, but not all lenders. And always remember, guys, that the lender has the right to kind of add on their own requirements, right? So in general, an FHA 203K loan is going to be 3.5%, maybe 5%, okay? Credit score, 620 to 640. But if a lender says, hey, for our 203K, we want you to have, a 680, then that can happen, but generally a 640 credit score, okay? Now, another do, guys, you want to have a single, for a 203K FHA loan, you're going to be buying a single family home, a duplex, which is 2 units, a triplex, which is 3 units, or a quad, which is 4 units. You cannot go over 4 units with that FHA 203K loan. This is where at that point they say, okay, this person is an investor. We're not going to give them this type of financing where they only have to qualify for 3.5% down. We may give them a renovation loan. We may give them a rehab loan, but we're going to make them put down 10%, 15%, 25%. Okay. So duplex, single family, duplex, triplex, or quad. And guys, let me just go back. When I talked about the standard 203K loan and the limited means that your renovations are $35,000 and under. That is going to be a more streamlined process, right? A little bit less documentation, a little bit easier to go through. You can buy a property that needs more than $35,000 worth of renovations. However, it's going to be more paperwork, a little bit more involved, a little bit more of a process as far as going through with the contractors and working with the bank to get that done. Can you do it? Absolutely you can. But if you're a brand new investor, this is your first time kind of getting your feet with real estate investing, you may want to try $35,000 and under for the renovations, okay? And another do is you're looking for a property that needs some TLC. Guys, the essence of real estate investing, the essence of using a 203K loan is that you're buying a property that needs some work, right? But you understand the value of the property. And this is where, because you're using the bank's money, AKA leveraging your credit to build wealth, come on somebody, which is what our whole wealth building ministry is about. Now you're getting an asset, a property that's going to appreciate in value that you're going to be able to use to kind of pivot and do other things. Now pause, let me explain right here. A property that needs some TLC. This might have been a foreclosure. This might have been where somebody passed away and they're just going to sell it as is. It may be a property that needs, may have had, has an unfinished basement, or it has broken windows, or just, it's not going to be a complete shell, guys, but just a property that many people are overlooking. But because you, come on somebody, are a wealth warrior, you're looking at the properties with a investor eye, not with a consumer eye. So it's not going to be move-in ready, turnkey. You're going to put some work into the property. Now, some don'ts. You are not buying a complete shell with an FHA 203K loan. This is where, guys, traditional lenders, banks and credit unions, they are not going to finance a shell. It's too high risk. That's where, when you are a hardcore investor, you're going to private lenders, you're going to alternative lenders, you're going to hard money lenders. So for this loan, yes, you can buy a property that needs some TLC, but no, it is not going to be a complete shell. The next thing, guys, another don't, is you cannot have Pookie from up the block do the renovations. Yep, I said it just like that. You're going, because the bank is involved with this, guys, a nugget right here. You usually have, a construction consultant, a HUD consultant that's going to work with you for this loan, make sure that the work is done properly. So the contractors have to be licensed and insured real contractors, which honestly, I like it, because you want the work done right. And to be honest, when you're going through this process, because the contractors know that the bank is checking the work, the bank is cutting the checks, a lot of times that gives them like a little bit of a push, come on somebody, to do the right thing. So another don't is you're not just going to have, friends, family, whatever, renovate the property. It's going to be licensed contractors, unless somebody in your family is a licensed contractor. And then the third don't, guys, and this one this goes into real estate strategy, so pay attention right here. Do not waste this 35, and I'm gonna say waste just like that, guys. I've been real estate investing since 2004. I was a vice chair of zoning. I went to real estate school. I'm still a real estate investor to this day, okay? Do not waste that $35,000 on cosmetic stuff. I don't care about, I'm not using the $35,000 for appliances. I'm not using it for a bunch of fixtures. I'm not using it for paint. No, guys, real estate strategy. Forced appreciation. That means when you have $35,000, if you are wise, and you are, guys, this is where you're using the bank's money to add livable square footage. That means you're adding bedrooms, you're adding bathrooms, or you're renovating like floors, meaning you took a property that's 2 floors to maybe, and it had an unfinished basement, and then you're finishing the basement, and now that property is 3 floors. You're taking a property that had 3 bedrooms and you're adding a bedroom and another bedroom, and it's 4 bedrooms. You're taking a property that was 2 bedrooms and 1 bath to 3 bedrooms and 2 baths, right? The reason why I'm saying that, guys, is because when you add livable square footage, when you're using the bank's money wisely to really force the appreciation, this is where you're adding additional equity to the property property right away. Let me give you an example, guys. If you need to watch this video twice, I'm trying to condense this for you. I could talk about 2 or 3K loans and real estate strategy all day long, which nugget right here, guys. This is a great time for you to join our Wealth Warrior community, our Patreon Wealth Warrior community, because I do monthly workshops and monthly Q&A where you guys can pick my brain and ask me more questions. Okay, I'll put the link in the description and in the pinned comments. But let me give you an example of forced appreciation. Let's say you buy a property and it needs some TLC and it is worth, you're buying it for $150,000. And let's say the property has $50,000 worth of renovations. Let's say you're finishing the basement and you're adding, a powder room in the basement, and you're adding, maybe you have to get like a sump pump and do some waterproofing, and all that equals additional $50,000. That means that your loan, your FHA 203K loan, is going to be $200,000. Now, that's your mortgage payment and your renovations. You're getting all of that from the lender and only putting down 3.5%. Game changer, okay? But this is where, when the property renovations are actually done, now when you get that property appraised, now when you pull comps on that property is now worth $300,000, and like immediately. Y'all don't miss it. You borrowed $150,000 and then you borrowed $50,000 worth of renovations. So altogether, you have a mortgage for $200,000 and you only put down 3.5%. And the bank helped you renovate the property. And now when all the renovations are done, because you added a basement, you added waterproofing, you added a powder room, now that property appraises at $300,000 right away. Guys, this is where you can do a home equity line. You can do a cash out refinance. Let's say, so that means you have $100,000 worth of equity sitting in the property immediately. And I'm not even going to talk about, I don't even have enough time, guys, to talk about if you add a property where just the actual location, you picked a great location that's being built up, and that there's going to be there's going to be more appreciation because the property values are going up on top of your forced appreciation, on top of the additional equity. Guys, literally, it can change your life. So now you have $100,000 worth of equity in this property. You can pull out $50,000 by doing a home equity line, a cash out refinance. And with that $50,000, let's say you do what? Buy another property, down payment on another property. Let's say you start a business. Guys, I talk all day long about side hustles, about growing additional streams of income, about real estate investing. Why is that wise? Because you're using a asset to pay for other assets. Nugget right here. Another reason why this is so smart, guys, is because the interest rate on a 203K FHA loan is, even though I don't care what people say about when you're watching this video, people say it's high to buy right now. Well, it's high to rent right now. So if I'm going to pay a high price, I'd rather pay it for my legacy, for my empire, for my wealth building. Come on, somebody. So that means that interest rate on your 203K FHA loan is, no matter what, is going to be way less than an interest rate on a business credit card, a business term loan, a business line of credit, on a hard money loan. So guys, nugget right here, wealth building nugget. The amount of money you borrow makes sense, right? But also pay attention to the rate in which you're paying it back. Because if I have the option to pay back $50,000 at, let's say, 7%, as opposed to $50,000 and let's say a business term loan is 10%. Let's say a business credit card is 15%. Let's say a hard money lender is 20%. Well, guys, I'm saving myself thousands and thousands of dollars by using the equity in my property to actually purchase other properties, down payment for other properties, renovate other properties, start and grow my business. I could go on, okay? So forced appreciation, that means that you're getting a property that needs some TLC, you're using a 203K FHA loan, and you're being wise about what you're using the loan for. You're not using it for like small things like, guys, get your appliances from Best Buy, from Home Depot with your business credit cards. Guys, I will link my 10-part free business masterclass that will show you how you can kind of build business credit. Guys, this is where leveraging your credit to build wealth. Use the bank's money for the heavy lifting, the big renovations. Use your business credit cards, business retail cards, business lines of credit for the other things, the appliances, the fixtures, if your money goes over, for the paint, for the carpet, for all of those kinds of things, okay? Look, got it good? And so the last thing that I'll say right here, guys, is that, it's the 12-month owner occupancy. So this is where you can live in the property. And then, after 12 months, you guys can have the option to sell it. You can move out and get another property and rent that property out. But that one smart decision, guys, hear me right here. One smart decision can be the catalyst to so many other opportunities and options. So that FHA 203K loan, guys, this is where nugget. Different lenders are going to have a little bit of different requirements. This video is intended to simplify it for you. This video is intended to make you aware. And this video is intended to let you know that this financing is out here that can be a little game changer for you and your family, okay? So your next steps, guys. I have a home buyer workshop. This is the nugget for today. Every single person who is watching this video, your next step should be to invest in the home buyer workshop. Now, why? First of all, I made a super low investment so that everybody could invest, but literally I give you a roadmap. This is what you do. This is where you can go. And I break down qualifying for real estate financing and income assets credit into 3 steps in which you can execute in the next 30 to 90 days. And I even give you additional resources and lenders who have this type of financing. So if you are interested in investing in real estate and creating wealth and creating legacy, your next step is to invest in the home buyer workshop, because it's designed to give you a proven roadmap and next steps to increase your personal credit scores and qualify for your mortgage pre-approval in the next 30 to 90 days. You will end this year as a home buyer. Amen.